with time, this will turn out to be a very good opportunity to deploy cash, put it to work. Generally, we want to see things just stabilize a little bit and just seem like we're getting a bit of an uptrend here. But it's what these market events turn out to be. They turn out to be opportunities, and it's really what sets up the very strong returns and results going forward. This is the Realize Your Wealth podcast by Aretec Wealth. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. All right, here we go. We're back. It's Friday. Another interesting week in the markets this week. Good to be back in the saddle here, back in the swing of things. Though I think my tan is already fading after vacation though here.
I don't know how much of a tan you're able to get. I know you were working a lot and just managing with all the kids and everything, but it's good to have you back. Did you survive okay?
Yeah, it's good. I joke. It's nice to get away. We got some sun, but there was lots going on vacation. We're still getting stuff done last week and looking after the little one. So most of it chasing the kids around the resort. But I think I got some sun, a little bit of relaxation, which is good. That was our annual March break trip, which is nice. Lots of work, but lots of fun.
Yeah, it takes you a good amount of time to recover, so that's why you only do it annually.
Oh yeah. No, it's good to be back. But no, and you and Roman did a great job last week on the video, and not an easy week to be doing that either. Just markets have been all over the place, all over the map here. All sorts of craziness happening in the world and in the market. So great work, Greg and Roman, and looking forward to diving into things today.
Yeah, thanks. And this week, another kind of challenging week, almost a tale of two halves. Kind of have a good first half of the week, and then things kind of come off a little bit near the end. So lots of volatility. So we're going to get into a few topics here, Will, but maybe just to kind of set the stage, we're kind of at the end of the month. It's obviously hasn't been a great month. Can you kind of just give us a little bit of an overview on what's been going on and just try to give some perspective?
Yeah, I mean, look, it's pretty nasty out there right now, to say the least. And all of this started pretty much a month ago with this war in Iran and the U.S. going in there. And what we're starting to see now is the kind of second order implications of all this ripple through in markets and concerns in the economy. I think early on in the first week or two, we weren't sure if this was going to be prolonged, what was going to happen, but now we're starting to see all the implications ripple through, into markets, into portfolios, but into things like energy prices and inflation and interest rate expectations, which is certainly starting to change some of the dynamics of the markets and has shifted things a little bit, but there really hasn't been a lot of places to hide either in March. Cash is one of them, which we've got a decent amount of. Energy stocks has been the other. But other than that, there's not a lot of pockets or places in the markets going up. Maybe some really defensive types of areas like consumer staples have held up okay. But other than that, pretty much everything's had a downdraft here in this market.
Yeah, and starting with energy, that kind of sets the stage because this month we've seen energy prices trend higher. We've all seen that at prices at the pumps, and then that ripples through, okay, what does that mean for inflation? Okay, what does that mean for interest rates? So they're all kind of tied together. Just for energy, I mean, it's been a month where we've seen higher energy prices. Like for you, is this a trend? Is this kind of a short-term blip? What are you seeing?
I mean, I just have a hard time believing that you're going to see oil going to significantly higher levels here. Like if you look at where oil has gone to start the year, it's up. I mean, I've lost track of the exact number, but I feel like it's up 50, 60, 70%, something like that. And still climbing. You've got all the energy companies in the whole complex in Canada and the US, they're trading at or well above all-time highs. Extremely overbought conditions on the back of this. So I think it's a short-term phenomena that if you've got these oil and gas, these energy names, you're probably actually wanting to sell them into strength and rotate out of them. Look, it's not to say that this conflict is ending today or ending tomorrow, and energy prices are going to fall back, because you probably will still have sustained energy prices for some time for a host of reasons. Just when we look at the underlying, I think it's really overbought, overextended, and it's also not really the area of the market that you want to be leading. If things like energy, oil and gas are your market leaders and consumer staples, really not a great market or investment environment longer term.
Yeah, so with energy, well, kind of to compare it to 2022, 2022, we saw energy prices higher. We saw energy stocks do well. Big difference between then and now is now we're seeing energy prices higher because of the war, basically, where in 2022, that was because of systematic inflation. Inflation was at 7, 8, 9%, where this seems to be, as it stands right now, a little bit more of a short-term phenomenon.
Well, I mean, look, I think in 2022, this market definitely has a bit of a feel of 2022, but I think the Russia-Ukraine war pushed energy prices higher for sure, right around a similar time. It might have been almost exactly to the day 4 years ago that all that kicked off. And you saw what you saw was a few months of higher oil prices, high oil stocks, and then eventually that complex fell apart as well, and the market turned over and changed course. So I mean, I do think there's similarities, which helps kind of paint the picture, I think, and compare the two. But no two markets are exactly the same for sure. This is a different conflict, different situation. I think that inflation, that systemic inflation, we haven't seen that yet, but there are fears of it. I think the difference was COVID and all the supply chain disruptions that happened in 2020 and 2021 is really what caused that inflation and those sky high numbers in 2022. So I don't think this conflict and higher energy prices is enough to cause that, but the way the market's positioned, the way the market's trading, I think it feels a little bit like inflation's going sky high again, which creates a ripple effect. But I tend to think this is going to be short term. That Strait of Hormuz will get opened up at some point here, or things will recede, and you'll start to see a little bit of a normalization of some of these trends.
Yeah, I don't think any of us really knew the Strait of Hormuz a month ago, but now it's everywhere. We know all about it.
Yeah, I don't think the U.S. and Trump knew what was going on there either. But if nothing else, it's interesting because it's almost a new form of economic warfare where Iran is shut this down and basically is holding the U.S. hostage here to try to get them to back off. And that's, I think, I mean, again, I'm a geopolitical expert, but I mean, I think if there's enough economic market pain that's inflicted, I think you'll continue to see the rhetoric and the language change. The problem right now is we're seeing some of Trump's language on this change. Oh, yeah, we're going to make a deal. We're in talks. I don't think the market's really believing him, because that story's been told so many times that they probably need to see some real action as opposed to just tweets and social media and talk about it. Well, that's one of the differences, is the market is not necessarily buying what Trump is saying, that there's going to be a deal made. But in this market, in this world, that could change at any point, right? We could see something pop up that, oh, they've pulled back entirely, and that oil's flowing and the supply's not cut off, and then all of a sudden oil prices drop significantly, and you start to see some of the leaders in areas of the market rally back. So again, if nothing else, very, very interesting market, very interesting time to be invested here.
Yeah, so maybe talk to us a little bit, Will, about just interest rate expectations, because obviously that's been changing a lot with everything that's going on, fears of higher inflation or rates staying higher for longer. How should investors be thinking about that going forward?
Yeah, look, that's the implication. I think when we talk about the fallout here is you got first war, higher energy prices, and we're seeing bond yield and inflation expectations rise. So when we came into this year, it was, oh, how many rate cuts are we going to see out of the Fed? How low are interest rates going to go? We had the new Fed chairman. Are these going to cut interest rates down to zero or negative? And now the concern is, well, this war is going to have all these ripple effects, inflation. Is this potentially going to slow down the economy? Is the Fed going to have to raise rates into the face of a slowing economy to combat inflation? So that's one of those risks and those negatives. So the war has led to higher energy prices, which is leading to higher inflation expectations, higher bond yields, and it just puts higher rates in general. That's one of the biggest factors. It just puts pressure on so many areas of the market. And even a lot of the defensive areas are interest sensitive, whether they're REITs or utilities or telcos or names like that are your typical high dividend payers. They can get a ton of pressure from higher rates, and it hurts bonds as well. So I think you do have some feeling that, is this 2022 all over again? I think the one thing from a bigger picture, I'm not convinced that there's systemic inflation that's going to flow through, but you've also got the tariffs as the other piece from last year, which could have fall over and or fallout and continuation. So we'll see how this all plays out and develops.
Well, kind of comparing it to 2022, that the inflation story had a lot to do with what happened a couple years before with the pandemic and COVID. It just that inflation didn't come from the war, the Russia-Ukraine war. It came from actually a couple years ago. So, what as we've talked about before, inflation, a lot of that stuff, it takes months and months and potentially even years to actually work its way through the economy and to actually have long-term implications on the market.
Yeah, and I think that's some of the concern, the tariff fallout, all these things could compound. I mean, the other, I guess, part of it too is when it comes to energy prices, I mean, even if they go significantly higher, energy prices alone, it's not enough to really move the needle in North America. Canada and the US are pretty much energy independent, although you'll see higher prices at the pump. A few $100s of extra consumer spending, even with extremely high energy prices, is not enough. So, I mean, I tend to think, you never know. We're sort of in a bleak time here, but I tend to think that this is going to be short term. The oil is going to start flowing again. Prices are going to come down, and you're going to see reversion. More from a technical perspective, I'd also point out that these more defensive areas are extremely overbought, overextended, have blown through all price targets, expectations, fully valued. So unless you think that thing is going to go on for months and months from here, that's very likely to revert. And if you look at all the other areas of the market that have been your mid to longer term leaders, certainly not this month. They're very, very oversold and washed out, whether it's the technology or industrials or financials, all these areas that are benefit, and materials as well is probably the big one, which we talked about last week, in the gold complex, which is its own reason as well. A lot of those benefit from lower rates, benefit from the more structural situation that was going on before all this, and I tend to think that those trends are going to resume. We just haven't seen it yet. You saw a little bit of it actually this week, even today, where some of the positions that we'd expect to be behaving a little bit better are starting to behave better, and that's partly because they're very oversold, and you're starting to see some money come back into them. Very, very interesting market dynamic for sure.
Yeah, a lot will like we're looking at the longer term trends, and yes, oil and energy has had a good month for sure, but that doesn't necessarily constitute that the trend has changed. And with our process, kind of to your point, we don't want to be piling in to energy as our defensive piece of the portfolio. We'd rather have kind of dry powder and cash as opposed to trying to pile into energy or consumer staples, because once this flips, those names are going to get hit the hardest.
Yeah, I mean, energy is really the last thing you want to be leading the market along with staples and some of the other highly defensive names. It's just not a good environment. And you saw that for a time in 2022 where energy and the staples were your big time market leaders. There's other times where energy prices have soared 2008, not to bring up that uh wound at all, but you do not want sky high energy prices, oil and gas prices. It's better if they're at a more reasonable, sustainable level. And so I don't think we're in a position. Yeah, I mean, look, you never know where things are going. I don't think we're in a position where energy is going to oil prices are going to $200 a barrel. I think what you're going to see is these with time start to normalize, start to come down, and some of the other areas that we'd expect to be holding up and performing here will do well. That being said, it is still very much this month has been very much a risk off environment, which I know is not fun to be in, which means things are going in the wrong direction. We've got more headwinds and tailwinds. So we do have elevated cash levels, elevated defensive, non market fixed income positions in the portfolio to help weather that. But really, that's about um, really just playing a little bit of defense, but probably more importantly, being ready to be opportunistic and having some additional cash that as this market stabilizes, we want to be able to take advantage of opportunities, deploy some of that cash, put it to work. Very similar to what we saw last year in 2025 around this time, March, April, with the whole tariff situation. That was an incredible opportunity to deploy cash, put it to work, get money invested. And at some point here, that will play out in a very similar manner. I'm confident.
Yeah, so we talked a lot about the similarities from last year, but also from 2022. And 2022 was not a great year overall. But then if you think about it, 23, 24, 25, you basically had 3 years in a row coming off the bottom of 2022. So we don't know when that's going to happen, but we know it will. And with our process, we have cash. We're ready to deploy when that time comes.
Yeah, so we're certainly keeping a close eye on things, looking at moves that might make sense, shifts and adjustments that make sense in the portfolio. Even last week while I was away, we were trading and working away and making adjustments based on indicators and signals that we're watching the markets, which those moves have helped us so far weather this storm. But this will be, with time, this will turn out to be a very good opportunity, to deploy cash, put it to work. Generally, we want to see things just stabilize a little bit and seem like we're getting a bit of an uptrend here. But it's what these market events turn out to be. They turn out to be opportunities, and yeah, it's really what sets up the very strong returns and results going forward.
Yeah. So when I think about it, Will, yes, we're off the highs. Yes, we're down. Yes, it hasn't been a great month, but the portfolio itself is actually in a good spot to weather any more downside, but also take advantage of opportunities, which I would say is probably the most important thing right now.
Oh yeah, we're holding up well. We're in a good spot, and know it probably this month. We've said this a couple times. Maybe it doesn't feel as good as normal because it's a bad month. But we want you to be wealthy. We want to weather through this, steer through everything that's going on. Take advantage of the opportunities. We want you to be wealthy. We want you to feel wealthy. Again, probably not feeling as wealthy as you did a month ago or so, given what's going on out there in markets. But that's okay. That's part of investing. That's part of life. That's how it goes. We're going to go through these seasons, these ups and downs, and we want you to realize your wealth. That's what Aretec Wealth is all about. That's what we're here for. We'll be back with everyone next week. And please don't hesitate if you have questions, if you want to chat, if you want to go through the portfolio, the strategy at all, please don't hesitate to reach out, and we'll talk with everybody soon.
Have a good one.